And well. Yep, the Facebook Live is going well. Good morning, welcome to another Wealth Coffee Chat. Hopefully your day's off to a good start, like mine. Couple of coffees in and ready to get the day started. So I'll do the quick intros as the Facebook Live warms up and people jump on. Jason Witten's my name. If you're coming back, welcome back. I know there's always one or two of the regulars who jump on first thing in the morning, so that's fantastic. If that's you, great to see you. Hopefully last night was fun. We had a mentoring night last night, had a guest speaker, Bronnie Ware, and Sam. Oh, thanks, Pratesh. That's great, man. Thanks for the shout out. Just for everyone in mentoring, my podcast, which is the Wealth Faculty, now is going to that interview monthly style. So just a reminder. So I'm looking forward to cranking that up. And if you have any guest speakers that you think would be cool for us to get in, give us a shout out. We might be able to do that as well. Try and track some of them down. So good morning, Adrian. Good to see you. Looks like a few people are jumping on right now. And good morning, Facebook user, whoever that is. Sometimes it gets blocked for some reason. Sometimes if you're coming from inside a group or something like that. Anyway, so all good. Anyway, for anyone who's stumbling across this for the first time or you're in mentoring, you've joined just recently and you're seeing this for the first time, welcome. Jason Witten is my name. One of the founders of Positive Real Estate and property investor, over 20 years, helping coach property investors through our systems, our coaching, our technology, our team, over 18. And that's great. Thank you. Thanks, gang. Across Australia and New Zealand. And what we do is each morning we get together around about 8 o'clock and we do a quick wealth coffee chat. All things property, all things going the distance, because we know that this thing is a marathon, not a sprint. You've got to go the distance in property investing. It takes time, it takes patience, and certainly takes a bit of effort, as we all know. But hey, it is tax time. There you go. It's tax time, gang, and tax time is a great time of the year. Certainly for us as property investors, we want to make sure we get the most out of our deductions when it comes to tax time. So we'll just quickly touch base and have a bit of a yarn about that today. So let me get rid of my coffee, put that down there, and we'll get into it. So tax time. A few things that we want to make sure that are going on for us at tax time. And as property investors, we get some advantages in the world of tax deductions. Okay. Hey, good morning, Graham. Because property or real estate, especially brand new real estate, has some fantastic tax deductions. So let's just do a quick review of what those benefits are. If you're new or you've forgotten, what are those benefits when it comes to you as a property investor, you as a PAYG earner, you as an earner of any description, the ability for us to manage and make efficient, keep more money in our pocket and pay less tax out to the government or anywhere in any tax situation. Real estate is fantastic. It's one of the best assets going around. So number one is depreciation. Depreciation. Property has some value when it comes to the size or the value of the assets that depreciate. Now, for those of you who've been around forever, this is not new. This is not a groundbreaking concept. But remember, gang, if you're new or it doesn't matter if you've been here forever and a day, land values go up. The building, the value of the building, the bricks, the channels, the mortgage, the walls, by default go down. And we have in real estate terms a paper loss. Okay, paper loss. Dollars not out of our pocket, but off of the value of the real estate. Now, you can depreciate a building for 40 years. Certain chattels, let's say this whiteboard, it might depreciate over 2 years, etc., etc. But depreciation is what's called a paper loss, okay? And that's of value to us because we get some tax deductions. So that's fantastic. We've got to make sure we maximize those. Lots and lots of accountants aren't that good at doing that, okay? And we'll talk about that in a minute. Depreciation, the paper loss. Number two, capital gains tax. The world of real estate, if you ever have to sell a property, certainly if you own it in your own name, Prince Place of Residence, investment properties, you get some significant capital gains tax deductions, which is fantastic. Brilliant way to manage and minimize your taxes as you go along, which is very, very important for us because we want to make sure we keep the money in our pockets as we go along. Remember those ones, gang, capital gains tax. And number three, a few others we need to be able to manage, which is land tax and stamp duty and stuff like that. But, you know, that's for another time. I've done other videos on that one. Okay, so track those ones down. But tax time right now, what do we need to make sure that we have in place as a property investor? The number one thing we need to make sure we have, gang, is a depreciation schedule. Okay, depreciation schedule. Now, gang, it's not your accountant making it up and going, oh, I'll take a guess. No, it is a schedule from a professional company, either depreciator, Debt Pro, BMT and Associates. We've got a special deal going on with Depreciator. If you call those guys up, you make contact with Depreciator, say you're in positive real estate, they'll give you a good discount. But you need to have a document, a fantastic document. It's pretty big, and it literally lists out item by item every single thing in your property. And also, if you're in an apartment or a townhouse, the other things that you can depreciate as well. You know, you get to own a part of the pool and the cabana and all sorts of other things. The barbecue area, if you're in a common area owned property. But you need a proper depreciation schedule. Listen to me, gang. It doesn't matter whether the property is 50 years old or 5 minutes old. Call the depreciation team and ask them, should I get a proper depreciation schedule? And sometimes, you know, you take some photos and whatever, but every cent counts, gang. You know, even if it's $1,000 back this year in tax, that is better in your pocket. Matter of fact, we'll talk about where to put that in a minute, okay? So, depreciation schedule. I see this all the time. You know, oh, I'll take a guess. The accountant doesn't really need it. Blah, blah, bullshit. Get a proper one done, okay? Pay the dollars. It's tax deductible anyway. It should range anywhere between $400 and $800, depending on where the property is, how big the property is, etc., 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 okay? Don't miss that one. You have to get a depreciation schedule for you as a property investor. That's where all the gold is. That's where the cash back in your pocket is, okay? Now, for many of us, we should be getting a PAYG variation anyway. So PAYG variation, okay? And let me talk you through that for 5 seconds. PAYG variation is the ability for you when you have an employed job, you work for someone else, you're not working for yourself. Business owners, this is a bit different. PAYG variation means you get to claim your taxes back, this depreciation, as you go, okay? So instead of paying, let's say, $100,000 and you're paying whatever it is, $2,000 a month to the government, you might only have to pay $1,000 a month to the government because you're saying, hey, by the end of the year, I'm going to claim this tax back anyway. I might as well just keep it in the meantime. Now, that's clever because that can help us accelerate debt reduction and it can help us accelerate deposit building, okay? Depreciation schedule, gang, don't miss that one, okay? Don't miss that one. make sure you get all of the information, all of your paperwork together for your other expenses. Gang, the one that I see most people miss out on the most, interest, okay, is when you don't structure your loans properly, you don't have the correct splits, the correct redraws, the correct information and accounts for money that you've been using out of your redraw facility or your offset accounts when it comes to expenses that you've paid, covering any of the costs of the property, etc., the interest bill, those sorts of things. Make sure you grab every receipt, every expense possible, and get it in to the accountant. Don't make the accountant chase you. Get it all together, get it all sorted. It is well worth it. It is well worth a couple of hours each night for the next couple of weeks to get it all organized per property, gang. Every single expense that you can that you've incurred for the year, grab the receipts, grab the paperwork, put it together, get it to the accountant, okay? Because what you want to be able to do, gang, especially in the PAYG world, you want to be able to claim that money in and out straight away as soon as the financial year is over. There's no value in you as a PAYG earner dragging it out. Sometimes with business owners and stuff like that, you can get some value with taking a bit more time to do your taxes. But for you as a PAYG, there's no value in dragging it out. Get it done, claim it back ASAP. Okay, so this depreciation schedule, just a little quick one on that as well. A little heads up. What will happen in this PAYG variation? Your accountant might only claim 80 to 90% of that variation as you go, because they don't want to overclaim for the year, and that's okay. That's not. You don't want to get to the end of the year, end of the tax year, and then overclaimed when it comes to those tax deductions, and then pay some tax back to the ATO. They get a bit cranky about that. Go figure. So they might only claim 80 to 90% as you're going. And remember, you might get another 10 to 20% of cash back, of tax back at the end of the year. So that's why I'm saying don't muck around. Don't take forever to do it. Get it done, okay, as we go. So number 3 here, we've got tax time. We've got to make sure we get a depreciation schedule, get all your expenses together, get the paperwork in as fast as possible to your accountant. And then what do we do? What do we do with that money? If we've claimed it back weekly, fortnightly or monthly, or we get a lump sum at the end of the year, what do we do, gang? Give me the idea back right now. What do you guys think we need to do with that cash at the end of the year? All right. Okay, number 1, you can put it on your loan. Okay, you can put it in your offset account. That's the preferable place to put that cash, or you can make an extra payment. Remember, if you make an extra payment, the money's not in your control anymore. It's in the bank's control. If it's in your offset account, you're offsetting some of the interest. So I like the idea of that. Put it in your offset account. You're dead right. Away you go. Now, that loan, it can be in the offset, okay? And as that offset builds up, as you get dollars and dollars and dollars as you go, then it can build up to be another deposit. Or it can build up and you can use it to reno your property. Gang, the depreciation, the tax deductions, that money is not for consumption. Gang, it wasn't your money in the first place. Absolutely, Alison, save towards the next property. Absolutely. That money, gang, wasn't yours in the first place. Let's say if you wouldn't have owned a property, you wouldn't have got that money back. So let's make sure we don't consume that cash, okay, and then think, oh, well, that's great. I've got an extra $1,000 a month. I can live at large. You know, I can have more cappuccinos and smashed avocado, according to Bernard Salt. it goes towards your next deposit, or it gets saved up and goes in your buffer account. It builds as a buffer, or the renovation buffer for the future. Remember, Sam talked about, every 10 to 12, 15 years, you need to add some value. You need to freshen your property up to continue to maximize the income in your real estate as you go along, okay? So hopefully that makes sense, gang. It's pretty simple. It's pretty straightforward. This is not earth-shattering, but often we ignore the boring things, right? We go, oh, that's pretty dull. No, it's not. These are the things. A dollar at a time, the boring things repeated, done over and over and over again, done well, done properly, build up. They build up. If you get extra $5,000 back, and let's say over 10 years, you get $5,000 back, that builds up to $50K. Gang, that's $50,000 you are never going to have. And now what do you do with that $50K? A $50,000 renovation on a property is going to be pretty significant, which is awesome. It's just the money goes back into renovating. And guess what? When the renovation's done, you get some more depreciation. It's a self-fulfilling prophecy. It's wonderful. It's fantastic, right? Nothing wrong with that. I always get, it's really interesting. You get accountants or people going, depreciation or tax deductions, they're not real. I'm like, all right, well, give me your tax deductions. I'd happily take your depreciation and your tax deductions. At the end of the day, they're for real. It's real money back in your pocket. Take care of it. One thing to note, and you've got to just understand this is us as property investors. Those tax deductions, depreciation, get added back if you ever sell that property. Now, it's not the end of the world, let me tell you, because they get added back and then it gets all divvied up as a capital gain. But what's the secret here, gang? What's the number one thing? Buy well, never sell. I have no interest in selling my properties in the future. I've bought them to keep forever, right? And you get a few people carry on and whinge about, oh, when I sold my property, I had to give the tax back. No, you didn't. You just had to divvy it up as a capital gain. You still made money. If you don't make a capital gain, you don't give it back. And to be honest, selling, well, not to be honest, you guys know this. I'm not interested in selling. Why buy to sell if you're a property investor? Buying and selling as a business activity, different kettle of fish, different story. Anyway, that's it. That's me. It's done. I thought that was going to be a short one today, but it's been a bit longer. Yeah, there you go. Exactly, Alison. Buy well, never sell, and who cares? The property's paying itself off. Gang, this is the thing. Last night it was really cool to hear from Bronnie about, people talking about things at the end of their lives and going, yeah, well, I took care of my money and now that money takes care of me, gives me some dignity, gives me some choices, etc., etc. Anyway, gang, you guys know the drill. You guys know I'm passionate about this and all of you guys are as well. So get to it. Get your tax done. Get the tax time done. Remember, it's not your money to go spend on beer and Skittles. It's money to go back into that system for you, that wealth system, to get your next property, maybe to renovate the property or put your buffers up. Get your buffers up as you go, as you're rolling along. Hey, whoever that is, mentoring will be out probably by the end of the week. We just touch it up a little bit and make it look a bit flasher. It gets recorded, obviously, and it's in the app by the end of the week. So hopefully that'll be quick as possible. All right, gang, I'm done. A 20-minute wealth coffee chat today. Took a bit longer, but it's well worth it. It's tax time. Get your money back. Let's get this party started, gang. Hey, Kaz, how are you? Good to see you, Kaz. Yeah, mate, it'll be up. Should be up by Friday. Usually takes 2 or 3 days just to get done as you go. All right, gang, that's it. I'm done. Hopefully you're awesome and well. Yes, good idea. How's that, Alison? You save your tax return, which is just tax back, to buy a furniture package, which will get you even more tax back. It's It's just value on value on value on value. Absolutely crushing it. Good one, mate. All right, well, I better go because it's 20 minutes long now, that the Wealth Coffee Chat. And they're usually meant to only last 10 or 15 minutes. But anyway, awesome. Hope you're all awesome. Join me tomorrow, Wednesday, for another Wealth Coffee Chat, round about the same time. All right, gang, take care. Bye for now.